Hello everyone, how's everyone doing? Hope everyone's having a good day. So we're just right now closed off the week around an hour ago, and price will open again in 1 day and 22 hours. So just before we get into reviewing the day, I wanna put it on the table that I haven't been making market review um, videos lately, just because of the fact of that this week, especially this week, pretty sure I covered last week entirely. It was just this week that was, hard to develop on because of the lack of volatility, the lack of news. We basically had a retracement week, but Tuesday was a pretty significant day, which formed this breaker that we have here low, high, lower low, and we have higher high, which price reached into on Thursday, 29th of May, and we were able to dig through that on 30th of May, Friday today. So we're going to be reviewing, obviously, Friday, 30th of May, and we're going to be talking about how it ties into the bigger framework or the bigger foundation that we have on the weekly time frame, obviously. Now, there's a bunch of drawings here that I want to take off because it's just not visually pleasing to have this many drawings, especially 1 minute first presented fair value gaps on this time frame. So if you guys remember, we had the down close week last week, and then earlier this week, see we had the big draw higher that worked the 0.75 level of the SIBI that we've been trading in within the last 3 weeks. So developing the idea and not shunning the fact that we had a minor retracement here, using this week to develop on ideas was important to me, especially Thursday and Friday, and Wednesday too, because Wednesday we had FOMC meeting minutes. But unlike we expected, the expansion days were actually, I'm sorry, the expansion day was only Tuesday. If we get our measuring tool, we can see that this Tuesday expanded 531 points of total movement. And then the rest of the days, which from here to here, combined total 3 days of 783 points. So not much volatility, except on Thursday and Tuesday. If you guys remember, this week was also a bank holiday week, so Monday was a half day, and that was placed in with Tuesday's trading day. So that may be a factor why price may have moved more on Tuesday than it did on Wednesday. But let's move into what we saw today. So I'm not going to be doing this on a slides format, just because I feel like it's very complicated and putting it all into a slides would be more difficult to me than just going, just putting on the charts and reading my Notion notes all on my second monitor, while I just speak about it and talk about how the things that happened developed the idea. So initially today, when I first got into the charts, we see that, let's consider Thursday's low, Thursday 29 May low. So the first thing that I wrote in my journal is that I want to see the previous day low, the run on previous day low to remain as a soup. I said that if 930 expands beneath it without retraction lower, retraction higher, prices are highly likely to trade higher. So if today was going to trade higher, and yesterday was a manipulation day that ran into this gap here, and we're going to institution order flow entry drill, and we're just going to keep trading away from it in a rush to attack the highs that we have here, then the run on previous day low would remain as a turtle soup, and we would not close beneath it. So from there, Let's go to the 4-hour. So you see I have, let me just take this off. This is honestly very annoying. Sorry, I should have done this before, but just give me a second. Yeah, okay. So now here we are on the forum, and as you can see, we have this wick here. So notice that in this wick, I have the consequent encroachment lined out as 1. So 2123.243.25 is the midpoint of this wick here. And then these levels here are the quadrants of the discounted wick through from its midpoints. So this level is going to be important when we consider today, especially how during the close, the candle that closes Thursday, we traded right perfectly into the level of consequent encroachment, and then rejected higher. We also have this newly opening gap here. We have the levels marked out on, and as I mentioned on a daily, this breaker high, which I'm not making visible on a daily, which I should. Notice low, high, lower, low, high, high. We spoke about this in the beginning. This level here will hit price on Wednesday and on Thursday, and now also for Friday. So back on the 4-hour. Let's see. Yeah, I think we're on the 4-hour. I just want to show the consequent encroachment of that wick. But let's drop into the 1-hour really quickly. And let me clear out some of these very annoying drawings. Yeah, okay, so now I think we can move on to the 15-minute, where I have to clear out some more drawings. That's alright. Let's keep that on there. Take this off. Keep on the 1 minute. Keep this on the 1 minute too. And we'll there we go. That's more neat. Okay, so here we are. What I saw going into the day was a kind of process where it outlined the idea of we're gonna move higher using discounted rates, and the discounted rate that I had that was prominent to me was obviously this discount wick, and then as a bigger picture, it would be the daily fair value gap that we were trading in, as well as the bigger high. So if you want kind of a thing to lean back on to understand where the daily gap is, you just understand that significant price beneath the breaker high would be inside the gap. So this is inside the gap, this price action that we have here. Beneath the breaker high, all reached into the daily fair value, and also the order block that we had, the high probability order block that we also have here, and we only managed to reach into it within the day. But let's not talk about that right now. But the things that I want to keep, you know, a pivotal point is the pre-market highs, which is the buy-side liquidity that we have today, and yeah, that's generally the main thing that I was trying to aim for, and also previous day high, which was, you know, it was a pretty deep target, but it's not completely off of the table that we can expand all the way there in one day. But as you can see, we wasted a lot of time basically during all of the morning session and the lunch session, just kind of slowed down, I would say is the right word. But we also have these equal highs here, and obviously the main low-hanging fruit target of the day was the pre-market highs by side liquidity. Now, the main issue that I ran into going on to this day, as you can see, we have 9:30 open, which dropped us and lower here. So the thing that was my biggest concern when going onto the charts and understanding that my main target is going to be pre-market highs by side liquidity was questioning that if we are expecting on higher towards pre-market highs, where can we see that 930 will trade to? Now, the first thing that I had drawn out was actually this low here. And if you go on a 5-minute chart, you can see that it's a swing low inside of this 5-minute gap. So that was obviously a point where I want to see price manipulate towards, and then spend some time beneath, and then run higher and take the pre-market highs by side liquidity. Now, I also have this drawn on, written down in my Notion. I wrote down that 930 can either expand higher towards the draw, since lots of manipulation happened during 8 o'clock and 8:30 traded higher. So just let me quickly stop reading and tell you what I was referring to. So you can see that we had 8 o'clock here that formed the pre-market. Not formed, but it closed, or sorry, it opened with the forming of the pre-market highs, and then from there we see that we have this big wick lower that would have obviously manipulated people away from this high here, and then obviously that would mean that we have lots of buy stops trailed on these highs, and also, sell stops trailed on these highs. We also have willing buyers above the highest breakout artists. So what I'm referring to here is that since 8 o'clock traded lower and manipulated, and 8:30, which is high impact news, actually expanded higher, which is, if my discretion is right, would mean that we're expanding towards a drawn liquidity. That would mean that 930 would generally have the ability, have the excuse to go on and deliver the same price action as 8:30, where it will just expand towards drawn liquidity, except, it would expand towards buy side liquidity and not find the need to manipulate, because already we had the pre-market manipulation that was pretty steep. So I was kind of looking for a continuation, which was beneath that open. I didn't exactly demand that price would form a new low of day and then start to trade higher from there. So this is where I marked out the low that we want to see: a low, high, lower low, higher high, and then in the process take out the pre-market highs by side liquidity, which would also put this lie here as low hanging fruit. Now obviously pre-market highs were taken later on, but not in the most fashionable way, not in a way where it allowed us to participate. So another note that I have down is 930 may also trade higher, since manipulation already done, which is what we spoke about. If not, price moving beneath this short-term low and forming a breaker would be a trade to consider. So now this is me highlighting what I wanted to see in the day, which is important for consistency and important if you want to see long-term results. Because if you move into the market blindly and you make ideas along the way, obviously this is not a thing that you want to be doing. So here, let's drop into the 1 minute time frame, and as we have all the levels marked out, the anticipated soup, now we're all familiar with what we have drawn on. Let's talk about 9:30 the opening bell. So, here, notice at 9:30, which is just this candle here, we move away from trading within the new day opening gap. Notice how generally throughout the day we find some sort of resistance near the new day opening gap level. And here you can see price fails to close through the high of the new day opening gap. So as price continues to trade lower, you can see that we took this short-term high here, dropped lower, we filled in this tiny 9:30 o'clock gap here. Then from there we trade lower and form our first presented gap here, just shortly after taking the short-term low that we had highlighted. So just before I go into whatever happened here, I want to go into the RTH hours and Let's take a quick look at what happened during the 9:30 open. So here, as you can see, 4:14 opened, or sorry, it closed here. 9:30 opened just a teeny bit higher than it, and then it completely filled it off. So it kind of left the RTH gap a bit useless today. I wouldn't consider it useless. I would just say it was just a little bit less impactful than if it was a big open range gap. So let's get into what happened here. Notice we have our first presented fair value gap, and then as price ran beneath this low here, we see that we have a situation where we inversed the first presented fair value gap, but then found resistance off of this order block here. Now the reason that probably happened is because if we go onto the 4-minute time frame and we look at where 9:30 was, which I've lost it here. If we look at where 9:30 was, where we formed our first fair value gap, it would be around this region here. This candle here that ran up higher actually inversed the gap that was formed within the wick here. And notice how us inversing the 1-minute gap is also us touching into this 4-minute gap, which caused me to take a pretty hefty loss, which set my account back. But I think this was a big learning experience. I know myself. In cases like this, I know that I won't repeat the mistake of neglecting hard time frame gaps. Now, the main serious problem that I'm facing with this is that, or it's the question of, did I purposefully ignore the hard time frame in order to get a trade because of the lack of trades that are presented to me this week? That's something for me to work on and something for me to journal and understand. But I'm sure many traders also feel this way. They ignore certain aspects that hint red flags just in order to feel something. And this isn't only about trading. This is about many things in life, many things that often take discretionary decision making. You understand that a thing is bad for you. You understand that it's a thing that you should not be doing. You understand that you are taking a flawed step. You are doing something that is harming who you are to yourself. But you do it in order to fill another void in you, in order to kind of satisfy a part of you that wasn't satisfied for whatever reason. In the sense where the urge to and the need is a more precise word to describe it with, is the need to actually feel the excitement of taking a trade, the need to feel the rush of taking a win. It overexcites you, and it leads you to doing things and saying things and performing things that you would have never done otherwise. And obviously, this is not only something with trading, this is something that you should also work on outside of your life. It will reflect in your trading when you know that something's bad for you. For example, let's say you're on a diet and you see a sugary treat and you still decide to eat it, understanding that it does not fit your diet. You eat it because you want to feel the dopamine release that you do from eating sugar. And that doesn't make you weak, it does not make you any less of a human. In fact, it makes you more of a human. In fact, it proves your humanity, it proves that you have heart, it proves that you have a normal psychology. It proves that you have a need for the 7 basic human needs, which I cannot list off the top of my head, but I'm sure you can search it up and you can get a list of what the 7 human needs are. And Now, understanding your losses, understanding where they come from, it honestly just it comes from who you are off of the charts. If you are a person that is likely to not follow what they say, that is undisciplined, that is unlikely to follow through with what they say they're going to do, which obviously reflects a lack of trust in themselves. You must work on your trust, on your self-trust outside of the charts, and then it will eventually reflect in your trading. You know, there was something that my friend told me. He said that the best traders are therapists, not in a literal sense, but in a sense where um, the best traders understand themselves most, understand their emotional triggers, understand why they do the things they do. It's like that one saying, I don't remember it perfectly, but it says, your subconscious will lead your decisions and you will call it fate. So, about this trade, I I might have chosen to ignore the fact of higher time frame just in order to feel the happiness and feel the pride in myself to know that the idea that I highlighted, which we spoke about recently, that we're going to run this low and then start to trade higher towards the pre-market highs. Well, the excitement of seeing the initial part of that happen, it overwhelmed me and it pushed me to take a trade while ignoring the fact that while we were inversing our first position rally gap, we're also moving into a forming gap, which if we draw the daily range from the side to the slope, you can see that that gap is in a discount, and we're sorry, a premium, and rejection off of it is highly warranted. So there that caused me to take a loss. And then from there, obviously we trade high, we trade lower, and spend more time beneath this low. And then just before the macro 950, which is this candle, notice we have a big drop lower, which just perfectly stops at the consequent encroachment level of the 4-hour wick. Now remember, I said that the 1 was a consequent encroachment, and this grading here are the levels beneath, or sorry, above the discounted consequent encroachment level of the wick. So notice we have here the close of this candle, perfectly two ticks above the consequent encroachment level. From there, for value gap, trade inside of it, accumulation, expansion, another form of accumulation, and here we expanded. Now remember what I said about this low here and how we were looking to form a breaker by engulfing price and taking this high, which we eventually did. There was kind of a similar scenario here. So we have obviously a low, then a high, which is this high here, lower low, which is beneath this low, and then we have a higher high, which engulfed this entire move lower. And then if you guys watched ICT 2023 Advanced Breaker Theory, you would know that the final up close candle in the high leg of a breaker, a bullish breaker in this case, is going to be the most sensitive spot. And that is where you see price run back lower, touch the high of the candle, and then from there we reject higher. Now, honestly, I do not remember if this was before or after the fact that we had inversed the higher time frame gap, but I'm pretty sure that we were not able to inverse it yet. Like within that candle that went back into it. So the candle can't trade like this, so we went higher. We still were floating within this, then we went back into it, and then we closed through the high, giving us a market shift above this high. From there, we did a bit higher towards the high and gave us the breaker. High, lower, low, higher, high. So that's besides the point. But no, this taking this trade here would be the same mistake as taking this trade here. So I did not take that, but it was a trade. I did deliver towards this high, obviously with lots of accumulation. But here, going back to the bigger breaker, notice how, let me actually take this drawing here. And no, actually I want to keep that there. But just kind of visualize this with me. After we ran this high, that would mean that we had, finalized the breaker. And the engulfing of the low to high leg is now done. And now we have a breaker level that we can work off, which is this candle here. If we draw up that candle, and as you can see, as we close above this high, it immediately treats it as if it was a turtle soup. Now, obviously, from what I've mentioned before on this channel, bearish breakers are bullish turtle soups in bullish order flow, and bullish breakers, like this case, are bearish turtle soups in bearish order flow. So, as I saw the price run this high and I quickly reject off of it, push through this candle here, and start to fail to push through the newly opening gap, the probability of this being a turtle soup increases. As you can see here, we touch the higher than the opening gap, touch it again, run lower, we start using the lower bound of it within this gap here. Then price touches back into that breaker candle. We reject off of the consequent encroachment level, so it's just around there. Then we reject higher, go back to gap, touch back higher into the consequent encroachment level. Notice we form relatively equal highs. Then from there, we drop lower. Then we find off of this touch of the consequent encroachment, we find that it was enough to, deliver us through the first Pentagon riding up and the breaker. So I want to take off the breaker drawing because it's getting a little too messy. But notice here we also have a low, high, lower, higher, high, and then the higher high formation running into an opening gap, and then price finding respect all of it and then closing through these gaps here that otherwise would have had, especially this intermediate low here. Price closing through this intermediate term low obviously throws the idea out of the window that we're going to be respecting this as a bullish breaker. So then we kind of flip that and we have a high, low, higher high, and then have a lower low. And then this range here becomes a breaker. As you can see, if we drag that out visually in time, price refers to this level once, twice, and we drop lower during lunch, all the way beneath previous day low, and then if we move into the time frame, I'll draw on the consequent encroachment level of this entire candle. Or sorry, the wick. I don't want to include the wick. Just do the bodies. And so we have that half point of that high probability order block. As you can see, if we go here, we touch into it, reject higher, run down beneath it, beneath this short-term low, spend some time accumulating orders, and there, reject higher, take that drawing off now, and then from here we accumulate up until PM opening range, 1:30 to 2 o'clock. We have this gap here that was formed within that range. As you can see, price kind of doesn't treat it with the most respect. But then as we close off the open range, price refers to the level consequent encroachment, and then rejects us higher, putting us back into the wick. Oh, why is that glitching? That puts us back into our consequent encroachment level of the wick. And then from there, you see we find respect of the half point of the discounted wick. Then we refer to it again here, and then the 0.25 level, run through the first Pentagon rally gap, and look at this. Drops back lower perfectly at the consequent encroachment level of the first presentation for rally gap. From there, it takes us higher. Then we accumulate with not much respect or awareness of arrays. We kind of sideways price action until we take out the pre-market highs outside liquidity, which was the target from the beginning of the day. And notice that we also have a 3 drives pattern. So we have price run liquidity once, twice, and then from there we low for value gap here. Touch that, push through back to beneath midnight open, and then we accumulate until we close off on the week. So that's generally it for Friday's trading. It's pretty late. I honestly just I woke up from my sleep and I was curious with what happened today and said, what better way would it be to understand what happened other than to review it? So yeah. Hope everyone enjoyed this. I'm gonna go back to bed now, attempt to get a good night's rest, enjoy my weekend, and then hopefully the following week with the additional red high impact news, I'll be able to find profitable trades, and the more important point is to follow my plan, follow my execution, sorry, not follow my execution, follow my outlines, and execute properly. It's a bummer, like today, where my plan was highlighted as obviously you would want to see it highlighted, but price just did not allow the components to fall together properly in order to provide me a good execution. We might have had the right idea with where price wanted to move towards, but the way that when that open was placed and the way that there was inefficiencies that were failed to be closed through as confirmation that we're going to be moving higher now. But this is the way that happened. This did not allow me to execute properly. And in cases like that, it would just be the same answer of days where we don't have good folder news. It would just be to not trade. But obviously, the human mind is a lot more complex and takes lots of effort to do things that we need to do. And there's no denying that fact. There's no putting off the fact that we're all going to be humans, and one day we're all going to have psychological blunders and emotional blunders that are going to cost us. And the first step towards resolving this problem is to make peace with it, to understand that it's going to happen, to know that being mad at it and hating it and saying harsh things to yourself won't resolve it. We're not perfect. You should be comfortable with that. And if you're not, trading will really suck for you. So, wish everyone a good night and a happy weekend. And I'll see you guys as we move into the following week. We're going to have good trading, and as always, Lord willing, be safe.